Are you aware that global trend is shifting? And if you're not paying attention, your deal could suffer. From inflation to interest rates to the US national debt and now the tariff. So what is happening globally is not just the news. It's your next risk or maybe opportunity. So in this episode, I'll be breaking down how global forces can be silently affecting your deal and what you can do to mitigate the risk or take advantage of the opportunity. So sit down, relax, and enjoy this episode. Welcome once again to my economy update. For those of you that do not know, my name is Ibia Free. Today we'll be discussing the global economy and how it affects your deal. Many investors, not just people that are buying deals, most times they always look at things like the rent prices, occupancy, interest rate, those minor things. They always look at it and forget to look at the broader picture, because aside from the micro things, the things around us that affect those deals, there are other macro things that can have significant effect on our deals. So now let's break it down. Are you aware that if China slows down, it can affect the global economy? That is why whatever is happening between the US and China in terms of tariff is significant. It's a major issue that you should keep an eye on, because China is a global economy. It's one of the biggest economy in the world, and they are major partners to so many countries. So can you imagine if anything happens to China, you're going to have a ripple effect on so many countries. That is, if China economy slows down, it's going to affect other countries. How? Global demand will definitely drop if China economy slows down, because China buys a lot of oil. They're buying less oil and goods from other countries if the economy slows down. That can slow down many countries' economies significantly, and that will have a global effect. Aside from the US market, when China economy slows down, investors also react to anything that affects the China market. So they react to it in such a way that they take caution and they might even pull back on investing. So it's a major issue. As a multifamily investor, apart from looking at the US as a whole, we also look at what other countries like China are doing, because those things can have ripple effect on the American or on your deal. So it's important that you take a look at it. What if? Because remember, I did a video on the US debt and I spoke about China and Japan being the highest purchaser of our US debt. That is, they buy our debt in exchange for treasury bonds. And they had about 40% of it, but lately it has dropped to about 25%. Now that we're seeing that we're having more deficit, more than our gross GDP in the US. If we have more deficit in the US, which is currently happening, we'll need people to buy them up in exchange for treasury bonds and all that. Now, my question to you is, what if China decides not to buy any more bonds? How would that affect you, affect your deal, or affect us in this country? So let me break it down. Like I said, China and Japan are one of the biggest buyers of our bonds. It holds over 800 billion of the US debt. So guys, all these things happening between this administration and China, it's like we are stepping on a time bomb. How do you get to fight a battle with a country that has significant impact on your country? I don't know how that happens, but guys, like I always say, this is not a political stage, but let's leave that as that. So going back to what I was saying, China holds over 800 billion in the US debt. So they have significant ownership in the US Treasury, truth be told. So let's assume that they refuse, or they say, based on everything that is happening, we will no longer buy your treasuries, or will no longer buy your debt. Let's say they are upset or something happens and they decide not to do that. What would be the impact of that? If they decide to do that, there will be a significant impact on interest rates in the country. And let me tell you how that works. It means that China, as the major buyer of our debt, if they decide to pull out, it means that the US will have to look for other buyers. And in order for you to get other buyers, what do? You make it very, very appealing. You put some incentives to attract more people. And how do you get to do that? You increase the interest rate. You make it more appealing and for them to come. If the US does that by increasing their interest rate to other countries, what would that do to you? The amount you'll be using to buy the deals or properties will go up. Interest rate will significantly go up if that happens. So China plays a very big role in our US debt, period. Aside from if China's economy slows down and the effect on the global economy, another thing you should be looking at in the macroeconomy is the oil prices, not just gas, the oil itself. You need to be looking at that. And why is that so? Because higher oil oil prices makes everything expensive, including your utility bills, deliveries, repairs. How? Because people will need to look for parts and there will be movement from one location to another. These things will go high because most things are not done without transportation. So oil price is a significant effect on the deal you buy. So apart from looking at what China is doing or how China is reacting, you also need to look at oil prices, not just gas, oil generally. I remember I said this, that when the Ukraine and the Russia war started, because you should know this, Ukraine and Russia are one of the biggest producers of oil and gas. So if anything is happening there, then you should know it will have a ripple effect on the economy. Remember when the Ukraine and the Russian war started, what happened to oil and gas? It spiked, it went up, and including the sanctions that took place with Russia at the beginning, saw how that unfolded. Oil prices went up. So another indicator, things that you should be looking at that can affect your deal in the macroeconomy is oil, the oil price. How is it fluctuating? What is happening with it? That can give you a signal on how that can affect your deal. So what does this mean for you? When oil prices goes up, it means that budgeting becomes tighter. Interest rates might even go up. We saw that happen. And your cash flow might shrink a little because when you have more expenses, then cash flow reduces. So watch out for oil and gas when you're underwriting a deal. The next one is the US dollar. How strong or weak is the US dollar? Let's dive into that. A strong dollar makes imported goods cheaper. Why a weak dollar means that things will cost more, and that might lead to inflation, and that will also lead to the Fed increasing interest rate in order to combat inflation. So a weak US dollar is a negative to your deal. So these are part of the things you need to be watching out for. And let's not forget, many countries look up to the US dollar. In short, many countries prefer to invest in the US dollar or in the US stock or in the US bond because of their perception that the US dollar is one of the strongest currency, if not the strongest currency in the world. So imagine if investors perceive or believe that the US dollar is no longer strong, is weak. What's the implication? It means that they invest less in the US. So when the US dollar is strong, you get to see foreign investors moving their funds from their country and investing in the US. That is when you start seeing spike in prices, because we are seeing people from China or from other countries, Canada, investing in the US. And the more they invest in the US, it increases demand and reduces the supply, and that will increase price. You know, when we have more demand than supply, economists will tell you that will bring about scarcity. And once there's scarcity, then you start seeing pricing going up. So if the prices are going up due to foreign investors, it's a signal that the US dollar is perceived to be strong. So really, how strong or how weak the US dollar is can bring about the following things: how investors will react to the US dollar. It will affect investors' behavior, financing terms, and even how fast you can close a deal. Because if the US dollar is weak, you have less people interested in investing in the US. It's that simple. So it can determine how fast you'll be able to close a deal. We're seeing things slow down. We are seeing so many investors on the sideline. And just because of uncertainties, there's so many uncertainties due to the tariff back and forth that's been happening with this recent administration. We're seeing investors just holding back on their funds. We're having that happen to us. We have a deal currently under contract. We're supposed to have some foreign investors from Canada. They're supposed to invest a large chunk of money, but due to what has happened, we received a call from them last week and they said, baby, we're going to hold off first. We don't know what the US is doing yet. We do not trust what they're doing. And based on that, we'll need to pause on this. So these things have an effect on your deal. Direct effect. How people perceive the US dollar to be strong or to be weak will determine how investors will react. And not just that, financing, like I earlier said. So let's all bring all these things are said together. So you don't have to be an economist to be a great investor, but all you need to do is to constantly pay attention to the bigger picture, which is the macroeconomy and how it's reacting for you to stay ahead in the game. So in summary, I've stated some macro issues that you should be paying attention to, like China, oil and gas, US dollar, how weak or strong it is, because this will influence how much money you can raise on your deal, how much you can borrow, and how you can operate. So the key takeaway for you today is to constantly monitor the market and see how it reacts, and also see how it's going to affect your deal, because now is the time for you to focus more on your operations. And there's no other way for you to concentrate or focus more on operations without staying on top of the market to know exactly what is happening in the global market. So always learn to turn into your news, watch the news, read articles, listen to podcasts, listen to the conversation to know exactly how this is going to impact you. Whether you are an active or you're a limited partner, this is good for you to know what kind of investment or opportunities are in stock for you and what you need to to do to take advantage of it. I hope this was beneficial to you. I look forward to seeing you on my next episode. Thank you and have a wonderful day.